ready to potentially amplify your crypto gains, but also understand the amplified risks. Today, we're diving into Binance Futures. First, you'll need a Binance account, and then access the futures platform. You'll likely need to acknowledge the risks involved before proceeding. Futures trading involves high leverage. Binance offers USDT-M and Coin Futures. USDT-M uses USDT as collateral, while Coin uses the cryptocurrency itself, like Bitcoin. Choose based on your preference. For this tutorial, we'll focus on USDT-M futures. Next, select the futures contract you want to trade, such as BTC, USDT. You'll see the current price and other market information. Now choose your leverage. This is crucial. Higher leverage magnifies both profits and losses. Start with lower leverage, like 5x or 10x, until you're comfortable. Adjust it using the slider. Decide whether you want to go long, meaning you believe the price will go up, or short, meaning you believe the price will go down. Click either buy, long, or sell short accordingly. Choose your order type. Limit orders execute at a specific price, while market orders execute immediately at the best available price. Enter the price and quantity you want to trade. Crucially, set your take profit and stop loss orders. This helps manage risk. Take profit automatically closes your position when it reaches your target profit, and stop loss closes it if the price moves against you, limiting potential losses. Once your order is placed, monitor your position closely. Pay attention to your entry price, liquidation price, and profit loss. The liquidation price is the price at which your position will be automatically closed to prevent further losses. Remember, futures trading is highly risky. Start small, manage your leverage carefully, and always use stop loss orders. Good luck, and trade responsibly.